My bubble detector is up pretty much close to its all-time high. And that means that the stock market is in bubble territory. It's very expensive, it's very overbought, and it's very overhyped. So I'm not predicting, I'm watching the stock market. That signals to me danger. The slowdown idea is that the fuel for the economy is really what's going on with the money supply. Right. If you're injecting more money into the economy, it kind of revs the engine up. If you slow it down and lean back on the fuel, it slows things down. So the reason for that is that the money supply drives nominal GDP. And remember, nominal GDP has two components: the real rate of growth in GDP plus the inflation rate. You get it all wrapped up with nominal GDP, and the best way to predict it, changes in the money supply. And what have we seen? If you look back to July of 2022 and look at the money supply, the stock of money is actually a little bit lower now than it was a couple years ago. The stock of money has contracted. That's one factor. And the current rate of growth in the money supply year over year is significantly lower than Hanke's golden growth rate of 6% of M2 growth year over year that's consistent with hitting a 2% inflation target. So the stock has gone down over the last year and a half, 2 years, and the rate of growth, although it's picking up a little bit, it's still below where it should be if the Fed wanted to be hitting its inflation target of 2%. That's the story. Why am I pretty convinced that there's going to be a slowdown? We've only had 4 times where you've had significant contractions in the money supply in the United States since the Fed was founded in 1913. And all of those, as night follows day, we've had recessions. Actually, one of them, we had the Great Depression. The money supply, the stock of money went down from peak to trough about 39% from 1929, 1933 period. So, and that, of course, set off the Great Depression. And then you had the Smoot-Hawley tariff come in, and that added to the problem. That complemented the slowdown in the money supply, the collapse of the money supply, and we had a terrible Great Depression. So today we've got the slowdown in the money supply. We've also got a lot of threats of tariffs, by the way. By the way, the Smoot-Hawley tariff was a big deal because the U.S. put the tariff on, and our imports of goods in the United States went down by about 70% from where it was before. So there was a huge contraction in imports coming into the United States, and that meant economic activity overseas contracted, and there was a tit for tat. We put the tariffs on, but then the foreigners put tariffs on us. So international activity shrunk, and we had a worldwide Great Depression. Tariffs are a complete disaster. They're like sanctions. They always backfire and don't produce what is promised. That's more American jobs. This is just a nonsensical argument because to bring back manufacturing supposedly in the United States, that's kind of the headline. And you have to think about this. What is going on over the long term? Manufacturing output in the United States goes up, but the jobs go down. That's because productivity, the output per hour of labor put into the system, keeps increasing. That's productivity. So you don't need as many workers to produce more and more things. And that's what happens with technical change. And that's what's been going on for decades in the United States. We've been losing manufacturing jobs, but the manufacturing sector is vibrant, big time. And by the way, we will get counter tariffs put on us by foreigners, which is going to make it more difficult for us to export. And the tariffs with regard to U.S. manufacturing are a bad deal because the inputs that we import that go into manufacturing, if you have tariffs, are going to cost you more. If you have free trade, and I'm a free trader, and open markets, you're selling me a cup. I'm willing to buy the cup. You're willing to sell it because it's beneficial to you. Otherwise, you'd never sell a thing. And I buy it because it's beneficial to me. And why is the government government, why are politicians interfering with that transaction? That's the problem with tariffs. You've got somebody in Washington, D.C. saying, no, you can't sell me that cup and I can't buy that cup at the price you and I voluntarily agreed to exchange the cup for. We have to put a sales tax on that. Maybe the rationale will be, oh, the foreign labor conditions are different than they are in the United States, and therefore it's somehow unfair or immoral or something like that. I would say it's immoral for the government to be interfering with you and I, who are voluntarily agreeing to you sell, me buy at a specific price and whatever the other things are in the term sheet. We probably want to have a term sheet if we have a cup. That's pretty easy. In general, Trump is a mercantilist. He has a lot of ideas in his head. Many of them are completely contradictory and therefore don't really make any logical sense. But when it comes to trade, he is a mercantilist. He's never seen an intervention in international trade that he doesn't like. That's one idea that's pretty clear and pretty fixed. Exactly how he plans to implement his mercantilist ideas that he has in his head, we don't know. And I don't think he knows. He's the kind of guy, that decides when he has somebody across the table and he's negotiating, he decides what he's going to do then, almost on the spot. Now, if you take contradictory ideas, let's talk about currency, because that's something else that Trump's talking about. He wants everybody to be using the U.S. dollar. He's promoting the U.S. dollar one day, but then he's promoting cryptocurrencies that are supposedly a substitute for the U.S. dollar on another day. And on another day, he's saying that the BRICS countries can't be producing a currency that competes with the U.S. dollar. They have to be using the U.S. dollar, or I'm going to put 100% tariffs on all the BRICS countries. But that's inconsistent because one of the countries, Russia, a member of BRICS, is sanctioned. It's not supposed to be using the dollar or the SWIFT payment system. So you have all these confusing things and contradictory things going on in his head with regard to currencies, but that's not the case with trade. He thinks, as many businessmen think incorrectly, that trade's a zero-sum game. If you and I trade, maybe you benefit, but I lose exactly what you're benefiting, or vice versa. That's the way they think about trade. Trade's always a positive. The buyer and seller always both gain. I was involved in that as one of Reagan's advisors and participated in the Grace Commission, which they produced a very impressive set of reports and as you say, 2,500 recommendations. And the thing I was in particular focused on was shrinking the size of the federal government's balance sheet. That is, privatizing surplus assets that the U.S. government owned, which would shrink the balance sheet. And let me give you an example of the problem that I ran into. They have a lot of surplus assets. The balance sheet's way too big. And the idea was, by the way, that we would sell the surplus assets and use the revenues to pay down the national debt. And one type of surplus asset that we have are military bases, naval bases, Air Force bases, that sort of thing, that aren't necessary. They are surplus. But if you go into one of those bases to try to privatize it and sell it, the base is located in a state, and every state in the United States has 2 U.S. senators, and there'll be one congressman or congresswoman from the district that the base is in, and they'll fight the thing like hell, which they did. I mean, it isn't surplus to them. You had all kinds of things like that. One piece of surplus property, by the way, the Defense Department had huge warehouses. And what was in the warehouse? Well, I looked into it, and they were vacuum tubes from World War II. And the Defense Department dug in their heels. They said, well, it doesn't really cost us anything to maintain that warehouse, and we might need these vacuum tubes someday, so we don't want to sell them. Here are 2 points that I want to make. One is that Ramaswamy and Elon Musk are only focusing on what I call the flows, the income kind of statements. The tax revenue going in or mainly the government spending going out. Everything they're talking about is in the income statement flow idea. What I was just telling you about is the balance sheet. And that is a blind spot that they have. They're not talking about anything on the balance sheet. And that's where the big bucks are, by the way. So right away, conceptually, they have a very limited view of what they're trying to do. That's one problem. The second problem is that they don't really understand that the incentives in the public sector are not the same as in the private profit and loss sector. If you're running a company in the profit and loss sector, you have to look at your income statement and your balance sheet every quarter or certainly every year. And if the thing isn't working right, you're going to go bust. So you have a huge incentive to correct things and clean things up. The public sector, that doesn't work that way. There's no one at the end of a quarter, at the end of a year, looking at an income statement, looking at a balance sheet, looking at projects to see if they were actually successful and delivered what were promised. That never happens. In fact, look at the Department of Defense. They can't even audit the Department of Defense. They're not operating in the private profit and loss sector. The government is not private property. It's not like a private business. And that's why businessmen have the idea that they can go in and run the government like they run a business. It doesn't work that way. Economics is all about incentives. And the incentives in the public sector are not the same as in the private sector. It's just that simple.